Hey guys, welcome to the first episode of the Forex for Beginners tutorial. So I'd like to first define Forex, a decentralized global market where all the world's currencies trade. So traders basically consist of the smart man and retail traders. The smart man are big banks and retail traders are us, the small guys. It's not like stocks where there is a central marketplace with all orders processed like in the New York Stock Exchange. So Forex is a product quoted by all the major banks, and not all banks will have the exact same price. So if you enter any bank today, you may look at their buying price and selling price of a particular currency. So what is Forex trading? It is a speculation on the price of one currency against the other. Or when we now talk of this term in our MT5, MetaTrader 5, we are talking of buying and selling of CFDs, which means contract for differences. So CFDs are a derivative of product that enable you to speculate on financial markets such as shares, Forex, indices, commodities without taking any ownership of underlying asset. Moreover, when you trade CFDs, you are agreeing to exchange the difference in price of an asset from point at which contract is open to when it is closed, and this determines whether you make money or loss. So you are basically giving your own forecast of whether price will go up or down, and then that forecast may determine whether you are profitable or you are not. So the advantages of CFDs: you can speculate on price movements in either direction, with profit or loss you make depending on extent to which your forecast is correct, like I said previously. So examples of CFDs: we've got currencies which you may see on charts written Euro USD, AUD USD. We've got indices: US Tech, US 100, Nasdaq, SP 500. Then we've got our volatility indices and crash and boom. We've got stocks, which include Vodafone, crude oil, etc. Cryptocurrencies: we've got Bitcoin versus the US dollar, BTC USD. Metals: we've got gold to US dollar. So terms you need to know when you're starting Forex. What is a broker? What do we mean when you say short and long trading? What is a bid and asks? What is a spread? What is leverage? What is margin? And more commonly, what is margin call? And then what is a pip? So a broker before trading. So for one to trade in Forex, you need to register your account to a broker. A broker is an individual command that buys and sells orders according to the trader's decision. So when you're sitting on your MT5, which is the common platform anyway to trade, when someone clicks buy, you send the information to a broker, and then the broker opens the contract. So the MT5 sort of like allows you to communicate to the broker so that you can open or close a contract. So examples of brokers: Deriv, XNS, AvaTrader, FBS, XM, TG Global. There are many brokers, and for you to say I have a good broker, the broker should be regulated. So a good broker should also have low spread, should have low minimum account openings. Yeah, especially if you are in Zimbabwe, because I'm in Zimbabwe, guys. When you like have $50, you may fail to open even to trade on other platforms. For example, on AvaTrader, the spread there and the minimum amount needed to trade are just too much. Then also there should be instant automatic execution of your orders. So yeah, there was a scandal of this Forex broker in South Africa, when there were people complain that when you open a trade, the trade doesn't go through. Or when you want to close a trade, especially after news, news is just trading for like seconds. So you know that when you want to close an order, especially if you're a high frequency trader, when you want to close a trade, when you're trying to close, the trade is not responding. And then when you're now in loss, that's when so those were some of the issues concerning that broker. You should also have free charting and technical analysis. This was a problem back then in the, I don't know when was it, but nowadays most brokers and MT5 just provide you with free charting and technical analysis, and also should have good leverage. I think the most acceptable is it 1:400. I'm not really sure. So what do we mean when we say you're going long? So going long is what is buying basically. We mean the bulls are winning. That's why when you see a forex chart, you see bulls and bears. A bull means going long, we are buying. So yes, that's it. And then there are other ways of buying on an MT5. You can use market execution, which is more of clicking and then it buys automatically, or you can use buy limits and buy stops when you want to leave at a certain, or you're anticipating that the price will reach a certain point and reverse, so you can use those. Then what do we mean when we say you're going short? So when you're going short now, we're talking of you selling, and this is where the bears come in. So when you look at most of the charts or main advertising forums, you see that there will be a bull and a bear, and they will be sort of like fighting. That necessarily means that the bulls have to, if the bulls win, you buy, if the bears win, you sell. That's it, guys. And then also there is also issue of sell limits and sell stop. I'll explain these on the next videos. So if you have seen this picture, this basically means forex. Those are forex animals. So this is a bullish chart. It means it's buying. Bearish is selling. That's the meaning of it. Then a bid and ask price. So a bid price, the bid is the price at which the market or broker will buy a specific currency. So when you're looking at MT5, you see that the numbers will always be moving up and down and down and down, up and down and up and down, whatever, in a cycle. But those numbers, when you're now trading, they do not really matter. They may affect the spread, the everything, but knowing the numbers and when you say a newbie and you want to start, they won't be of any significance, except we know that during news, the bid and ask price, there may be an increased gap such that the spread now is increased, and then that's affect your price. Let's say you want to buy during news, you realize that when you buy high to be paid, the loss will be just too much. So yeah, those are the issues concerning. So it's just the price at which the market or broker will buy a specific currency. Thus, at the bid price, a trader can sell the base currency to their broker. So there is a picture there. You can appreciate the base currency. And then ask price. The ask price is the price at which the market will sell a specific currency paid to you. Thus, at the ask price, you can buy the base currency. So the difference now, which I was saying, that the difference between bid and ask price is probably known as the spread. Then in leverage is the ability to gear your account into a position greater than your total account. You realize that most brokers, when they say open an account, it says that they will give you a leverage for a certain account. There are micro accounts, standard accounts, etc., etc. So you see that there is an allocation for leverage. Prehistorically, the leverage was, back then it was said that for you to trade you'd need 50,000. Imagine 50,000 for you to trade. Now everyone can trade, even an 18 or 16 or 13-year-old can trade. Just Back then, you needed to be a thousandaire, 100,000 or a millionaire for you to trade, because they would need 50,000 to open an account, then to fund, and then you control. Now, so that ratio enabled people to be able to trade with $10 accounts, $20, etc., etc. So yeah, most brokers just give you they allocate the leverage to you. So a pip, the smallest increment of price movement. Some of the brokers use points instead of pips, and it depends on the broker most of the times. It can also be used to measure profit, but however, most people don't like to use pips. They prefer saying I'm in $20 profit than I'm in 500 pips when you're in $20 profit. So most people just prefer to say. Then a lot size, putting together, so you need to put together leverage and pips. So a lot determines amount you want to trade. So for bigger hence need for risk management and powerful strategies. So a lot, if you want to use a bigger lot, there is need for you to have what? A bigger account. You can't use a bigger lot when you have a small account. Obvious, you hit margin call and then you have nothing in your account, you blow the account. Then margin call, most commonly called blowing an account, happens when one over leverages their account margin or balance, or when one does not use proper risk management. So there is need for you guys to know forex and all these terminology, so that when other forex traders are talking, you are not lost, you understand the language. Thank you guys. Thank you.